Welcome back to another episode of Policy and Profits. I'm economist E.J. Antoni. We have another crazy week of tons of economic data to get through, and obviously there are implications for the market and for you as an investor. I am beyond pleased to be joined by my dear friend Anthony Esposito, the one, the only. Anthony, how are you doing?
EJ, doing well. How are you?
Hey, I am hanging in. Like I said, another crazy week full of all, the drinking from the fire hose of economic data. We just got the latest jobs report for the month of September, which showed a healthy increase in non-farm payrolls. Also, actually showed a pretty healthy increase in employment. So the market seemed to react in a pretty positive way to it. Interestingly, as I'm sure you know, we also were seeing yields march higher, though. It's almost as if the market believes the Fed is going to pull off the soft landing, something that they haven't done since 1913, but, whatever. First time for everything, I suppose. And so we're seeing kind of everything march a little bit higher. So obviously big implications here. It seems that no longer is good news bad news, right? That Good news might be back to being good news. What are you seeing, Anthony, in terms of market moves today?
Yeah, the market action, to be honest, my model, which is a momentum trend model, was actually negative today for the second day. And I do write that report in the morning, try and give people a little heads up as far as some insight as what I'm seeing, what I'm looking at. That model was negative. So I was leaning short this morning. The market reaction was it was interesting because we got a big rally off of the number. S&P futures, front month futures got back up to 5,800, which has been about resistance. And then we faded back down to 5760, 5750. So it was an initial knee-jerk reaction. Guys piled in, guys covered shorts quickly. From a trading seat, that's what it looks like to me. But we're still stuck in this range, and we've been in this range now for the 11th session since the FOMC 50 basis point cut. I wrote about that this morning in my report as well. For anyone who doesn't know, you can get that at islandcapitalinvestments.com or on X at CMT_Anthony. The range has been, support resistance range has been in place. It remains in place. So the net of the report was there was more volatility, but within the range that we've sat in, and the net result has been almost nothing. So I remain net short on balance in the portfolio. I'm going to stay that way because everything that I see as far as internals show that we are actually, there's more risk, or risk is skewed to the downside. And I continue to think that if it breaks out, it'll break out, and I'll get those signals and I'll be able to read that on the charts. But right now, that report this morning didn't do much more than, an hour of trading to show any kind of bullish sign for the market. Good news is good news. Good news is bad news. Bad news is good news. Like, we work through these things over and over again. And to be honest, we work through those approaches, or that terminology has really developed and has grown in popularity as the Fed's manipulation, the Fed's input, the finger on the scale has grown over the past 2 decades. So yeah, we're in that conversation now of whether good news is good news again or good news is bad news. So remains to be seen. As far as the market, the numbers are what they are. The charts are what they are right now. Risk is definitely skewed to the downside. And we could dig into those non-farm payrolls and kind of look at why. And was this really good news, right? So I know you were on Mornings with Maria this morning. I saw you on TV. You are like the Mick Jagger of economics at this point. You have been up and down the island of Manhattan this week. I think you were on 6 or 7 different shows. Every time I flip the TV on, I hit the power button and I see your face, which I'm not complaining about. I'm just saying it would be nice if you could make some time for a friend to grab dinner while you're in the city for a week. But that's a whole nother story. I won't talk about getting blown off for dinner. Anyway, I cried about it last night. I'll probably cry later, but we'll just move on from there. Non-farm payrolls came in at 254,000, well above the survey of 150, prior at 142. The thing that's interesting to me, and we have a visual that we can pop up now to show kind of the breakdown of these jobs, and this is something I think we need to have a really clean, succinct conversation about it, and you are my man. Out of the 254, about 75% of these jobs were government, leisure and hospitality, or education and healthcare. So either low paying or funded by tax dollars.
Mm-hmm.
Could you go into that? We've talked about it before. Another report out where an oversized amount, 75% of the jobs are actually being funded by tax dollars, or just low paying jobs where people really can't support a family on and can't essentially live on at this point due to the inflation we have in the country. Dig into these numbers for me a little bit, and let's talk really about, was this really good news?
Well, Anthony, one of the things we look at when we see, let's just take the annual numbers, for example, so we get rid of all the seasonal adjustments, those kinds of variations. So the year over year change, all of the jobs that were added, you take all of the jobs that were added, rather, and more than half of them are funded by taxpayer dollars. So you mentioned those direct hires by government. Obviously, those are taxpayer funded. Let's say I'm an economist working at the Department of Labor. Okay, my check clearly comes from the federal government, funded by the taxpayer, but we also have to remember what you brought up, those indirect hires. There's a huge number of people who work in education, not for public schools, but even for private schools. So they're in private education, but their salary is still funded by taxpayer dollars. Let's say a school gets a grant, or a hospital gets a grant. The school hires a teacher, the hospital hires a nurse. With that money, they are using taxpayer dollars to pay an employee. That employee is essentially an indirect hire by the government. So more than half of all the jobs that we added over the last year were actually taxpayer-funded jobs. It's just simply not sustainable. We're basically looking at right now the best labor market that you can buy, with a couple $1 trillion worth of debt, because that's how much the federal government was in the red last year, well over $2 trillion for the fiscal year. And this is what you get. Frankly, jobs numbers that were pretty much comparable to what they were pre-pandemic in terms of gains, except now we have an even larger population, so we theoretically should be adding more jobs. Mm-hmm. But then the other group that you brought up, Anthony, you're absolutely right. We're seeing a ton in leisure and hospitality, right? We're seeing a lot in food accommodation services. So a ton of waitresses, a ton of bartenders, a lot of people working for hotels. And it's not that those are bad jobs, right? Mm-hmm. We're not like demeaning the people who have those jobs or anything like that. But these are simply just not the good paying jobs where you can typically support the stereotypical family of four. And what I think we're starting to see more and more of, Anthony, as we dig through the numbers and we see things like multiple job holders, going up really, really fast, hitting yet another all-time high in this report, is the fact that more and more people who already have a full-time job are going and getting a part-time job to mm-hmm. supplement their income because they can't make ends meet. Not only did they rack up a ton of credit card debt, but now their credit card's at 30% interest and they're just drowning. So that's, I think, a key reason why right now you're seeing more and more people get some of those lower paying jobs. They're part-time jobs, but every time you go out and you get one of those jobs, you're increasing the number of payrolls. And I think that helps explain why, when we look at employment, which comes from a survey of households, that number is now flat. It's almost exactly where it was since November of 2023. I mean, it's down marginally. So effectively, it's within the margin of error. So it's flat. In other words, no additional people have been employed in 10 months, except the number of non-farm payrolls has marched steadily higher. So you're increasing the number of jobs without increasing the number of people employed. Multiple job holders has to be a key explanation for that.
And is this a result of the fact that the jobs that we're replacing better paying jobs, as I would say them, the core jobs that build our economy and build our strength and actually build economic growth, GDP growth, supportive jobs. Not that leisure and hospitality and government jobs don't add to some kind of growth, but have we replaced the traditional jobs with either lower paying jobs or government funded jobs? And is that why we're kind of in this rut and in this spot where we see numbers that look better, but it doesn't feel better and it isn't better? Is that fair to say? Like, are we replacing better jobs, stronger jobs or more traditional jobs with these new government funded and lower paying jobs?
Yeah, Anthony, I think that's a key explanation here. When we look at, for example, not only the kinds of jobs, but also who is getting the jobs. I think that's
Mhm.
but it's also part of the reason for why Americans are so down on this economy.
Yeah.
Why polling on the economy is so terrible. And I'm not even talking about strictly political polling. We can get into that if you want to, but I'm not even sure it's necessary. If you just ask people, not how do you think Biden, Harris are handling the economy, but just what do you think of the economy, or how is your personal financial situation? How is the economy treating you, kind of thing. The numbers are absolutely horrific. And why do Americans view the economy so favorably or so unfavorably? Probably because they're not the ones getting the jobs. With today's report, the annual change in the number of Americans, native-born Americans with jobs, it's down over 800,000. So they're losing ground, not gaining ground. Conversely, foreign-born workers, which is a category that the Bureau of Labor Statistics even admits includes an unknown number of illegal aliens. We can only assume that number has been going up quite a bit the last several years.
Yep.
They have increased their employment over the last year by well over 1 million. In other words, all of the net job growth that we are seeing today is literally all going to foreign-born workers. In fact, there are fewer native-born Americans working today than before the pandemic 5 years ago. Think of that, 5 years and no progress. In fact, they've actually gone backwards, whereas over 4 million more foreign-born workers are employed today in the United States compared to before the pandemic. So, and again, we can have a debate about how many immigrants we need in this country and foreign workers and all that. Fine, we can have that debate. But the fact of the matter is, Americans are not going to view the economy favorably when they're not the ones who are getting the jobs, when they've essentially been left behind in this recovery. And even things like retirements don't explain it either. We can look at the data for the number of people who are retiring and see that the numbers still don't match. It still doesn't make up for this huge drop.
It's to that point, it should be no shock to anyone why an America First agenda is so popular. I mean, we really are. The citizens of this country, just for a second to step to the side, whether it be assistance from the government, whether it be the jobs market, whether it be the value of our dollar, Americans, our current leaders have placed us, second, third on a list. And it's about time. And it shows in how disgruntled everyone, and it shows in the fact that people are embracing an America First agenda and want to make America great again and want a leader that's saying, hey, I see you, I feel you, I'm one of you, and this is our country. And you guys should be first on the list. There's no question. That's government's priority. That should be government's number one priority. Let's go to a quick cut by Powell, just kind of chatting about his expectation of rate cuts and what he's actually watching, since they are they're in cut mode and kind of watching the data.
Yeah. So before I get to that second question on the unemployment rate, I'm going to ask you a point blank question here. How are you thinking about the November meeting?
So a couple things. One, we have two employment reports and an inflation report coming in. So the main thing will be to look, when we get to that meeting, at the totality of the data, and we'll be looking at the activity data, the unemployment data, and the inflation data, and asking ourselves, is our policy stance in the place where it needs to be for us to best foster achievement of our goals? And I think we'll take everything into account, and we don't have that data yet. So that's the main thing. But the other thing is just, I wanted to point out, and I kind of just did, that it's a committee that we will do what it takes in terms of the speed with which we move. But if you look at where we were 2 weeks ago, coming up on 3 weeks ago, I guess, when we wrote down our SEPs and made our decision, it was a situation where people were thinking, the bulk of the committee was at 75 or 100 basis points, and the votes were on 50, and that would mean 2 more cuts. It wouldn't mean more 50s. Now, of course, that'll depend on the data, but ultimately that's what the baseline is. If the economy performs as expected, then that would mean 2 more cuts this year, a total of 50 more.
So this whole data dependent story, to be perfectly honest, with the way they delivered 3 weeks ago, heading into an election, it's really hard for him to kind of play this, to kind of tote the line between whether it was political or whether, it wasn't, whether he's looking at a weakening economy and weakening job market, which he says, no, the economy is strong and the job market is safe. But yet inflation really isn't down to a level that they want it, but they're still cutting rates by 50 bips. So, just to use a JD Vance term from the debate the other night, he's kind of playing whack-a-mole here and trying to figure out what the pop-up story is of the day and how he kind of gets off the stage, clearing his throat as few times as possible, which the over-under there is 25, and then kind of moving along. For me, he just seems nervous. He looks nervous. He doesn't seem to have control of what they're doing or have a real command of why they're doing what they're doing. Again, the track record for the Fed's not great, as you mentioned, and I just feel like they're not really data dependent. I feel like he's kind of talking out of both sides of his mouth. It just doesn't seem like they're in position. He doesn't seem like he's in the position that he kind of tries to portray himself as being in.
Anthony, that's spot on. Absolutely. I mean, this is the same guy who, when inflation was running up to 40-year highs, told us that, oh, no, it's transitory. There's nothing to worry about. And he dutifully kept rates below 1% because he was still up for renomination and hadn't yet been confirmed by the Senate for another term as Fed chair. But and the other thing he did was he said a 75 basis point hike was off the table. But then as soon as he got confirmed, what did he do? He gave us 4 of those 75 basis point hikes, those jumbo sized hikes in a row. So, the idea that the Fed is somehow data dependent or politically independent, can we please finally put that narrative to bed? And, I know that Trump got a lot of criticism recently when he was talking about, the president should have more of a say when it comes to setting interest rate policy. I mean, Trump's not, you can love him or hate him. You can want the central bank to be independent or not. The fact is it isn't. And, presidents have had an incredible amount of sway over Fed policy literally for the entire history of the Fed, or at least most of it. Let's not forget there's a famous story, maybe infamous, of Lyndon Johnson taking the Fed chair down to his ranch in Texas, grabbing him by his lapels and throwing him up against the wall and telling him not to hike interest rates, in fact, to cut them because it was an election year. So, look, the Fed is already operating under a tremendous amount of political pressure. At this point, it might be better to just have it all above board, right? And to say, yeah, the president wants us to cut rates, so we're going to do it. Like, at least be honest about it.
So you're asking, I'm sorry, let me just go back. You're asking the Dems to be honest. Is that what you just requested? Because I don't know. I mean, we can hold our breath, but I don't know if we're going to get there anytime soon, unfortunately. And that's a great story about Lyndon B. Johnson. I've never heard that story, but I love it. I think the thing with Trump is, and it's always been the case, he pulls back the curtain. He pulls back the curtain. He says what everyone's thinking. He says what needs to be done. And he's been doing this for, 30 years, 40 years. And he's always been the same Trump. You can go back and listen to him speak in the 80s, in the 90s, in the 2000s. He's the same person, and he pulls back the curtain. And to that point, no one wants the curtain pulled back because it is so ugly and so nasty behind that, whether we're talking about Fed and Fed policy, the Treasury, the deficit, the debt, the southern border, Hurricane Helene, whatever we're talking about, the protection of our citizens are standing overseas and geopolitically and what we look like to our allies and our enemies. We can go on and on and on about how fake and how cloudy the government is at this point and how convoluted all the conversations are. And then you have a bull in a china shop come in who, by the way, every time he's told you're wrong or that's fake or that's a lie, whether it's a week later or 2 years later or 4 years later, he's always right. He always was factual and he didn't lie. So I don't know if we're going to see any honesty from the Dems anytime soon, but pulling back the curtain, I agree with you, would be very refreshing.
Anthony, what do you think markets are going to do, though, in terms of, let's say Powell goes 25 versus 50? Do you anticipate really a significant difference in the market reaction? I know a lot of people were surprised at, frankly, at how the markets reacted to the half point cut.
Yeah.
People thought that things were going to go the other way, and at the end of the day, it didn't really seem to make too much of a difference. Do you think markets will have a significantly different reaction if Powell decides to go 25 instead of 50 this time around?
I think something needs to change. So heading into that cut, we really saw the discounting of that cut by the markets ahead of it. So we had rallied in the S&P from 5,400 up towards 5,650. So we had a 250 handles in heading into that cut, kind of back up at our previous peak. Mm-hmm. And as I said, we've essentially coming out of the cut, we had a little bit of a pop, and now we've sat in this range for 11 days. So the initial reaction to that cut was volatility and kind of consolidating near a top. I think that as we move into the coming Fed meetings and the cuts, we're moving away from the narrative. The market is about, a lot of times, about narratives, right? It's about the Fed rate cut. We've been hanging on this Fed rate cut conversation for years. Or it became AI when the Fed rate cut conversation was becoming the wrong conversation. Then AI popped in all of a sudden. Everything was AI, and we had, it is about narratives for most people. You hear the story, you hear, the kind of the path higher because everyone essentially wants it to go higher. And that's kind of the way we go. So I think we need the story to change. I think the Fed rate cuts are not going to be as much of a big deal moving forward. I think the spotlight will become earnings as we head into the next earnings season, and will definitely become, where is inflation, right? And then what do earnings look like? And then we have the election coming up. So I think the cuts will kind of take a backseat. And then we're really watching employment, and people are watching employment, and they're saying that it's because we want to know if the Fed can cut again or not. But yeah, I think the undertone is we're watching employment because there's a real problem here with the economy, and we're facing a recession that it's kind of being spoken about on the side, and people understand that the risk is there, but it's just not, it's not being spoken about honestly and openly at this point. So Fed rate cuts are important, but I think that the significance of the rate cuts are dropping, and risk of recession, earnings, the election, definitely taking the forefront. And honestly, I continue to say that geopolitical risk is not being discounted in the market. I mean, we are just numb to everything that goes on in the world, whether it be the war in Ukraine, more importantly, to be perfectly honest, the war in Israel right now. We're just numb to it. The markets are numb to it, and we continue to grind along until we don't. So the Fed rate cuts definitely on the table. I think that there's a lot of smart people on Wall Street, clearly, and a lot smarter than I am. So people are really starting to look at what does the economic strength look like? What does inflation look like? What are earnings going to look like? We're getting back to the risks that are present, but no one has been talking about. They're going to start to pop up.
Yeah, and speaking of Israel, I mean, it's amazing how for well over a year now, right? The Middle East has essentially been on a knife's edge. Easily things could go either way. To a certain extent, there's been an amazing amount of restraint on both sides. I'm not taking sides here. I'm not excusing anyone's actions or anything like that, right? But I'm just saying, it's amazing how both sides have had the capability to do, more missile strikes or more ground invasions, whatever the case may be, than they have. And it's surprising that, more oil infrastructure, let's say, hasn't been targeted. Yep. It's surprising that the attacks on cargo ships in the oceans haven't been much worse than they have been. Again, it's not to say things are good. Things are terrible. People are dying all over the place, including plenty of civilians. It's tragic. It's horrible what's going on over there, all of the bloodshed. But it really, I think, is amazing that things have not gotten worse. And almost in the same way that markets for a very long time now have been kind of like on edge, anticipating the Fed rate cut, and it finally got here. Markets, it's almost like they're becoming numb, like you said, to the conflict in the Middle East. Like they've been desensitized to the fact that the conflict has been on the knife's edge in terms of that potential for escalation. And they've been there for so long that it's like we're beginning to think it can't get worse. It can't escalate.
I think you nailed it. I think you nailed it, and that's exactly what I hear from friends at other funds and from buy side guys and bankers. I just think people are numb to it and feel like, hey, it's always like this. It's kind of like you walk the edge of chaos, and you just start to feel like I'm never going to fall off. I mean, we are starting to see some move in the markets. Oil up about 12 to 15% very quickly in the past week. That makes sense. Gold is continuing to rally towards that 3,000 number, which I think is a very legitimate target. That makes sense. And the equity markets, maybe that's part of why they haven't really broken out coming out of the Fed. The escalation in Israel has kind of been to the forefront. So we haven't seen a complete sell-off, but we also haven't seen that push higher in the markets. That could be part of it as well. But I do think you nailed it. It's just there's a numbing effect of all of this. And I think people just feel like, hey, it's always like this. It is what it is. They're going to shoot back and forth, and then it's going to end. My fear is that we're in a different, it's been escalated. The attack on Israel, October 7th, the attack recently by Iran with the amount of ballistic missiles and the types of missiles that were shot at Israel was a clear escalation. And Israel has responded in kind. There's no question. But there are escalations here. And, the smoldering has started to become little flames, in my opinion. And I think that could ignite and become, an all-out war. Not that it's not now, but a wider ranging, widespread war pretty quickly. And the players involved are real, right? We have 15 vessels in the area. We just deployed more troops, another 4,000 troops to the area. It's clear that China and Russia are involved on the Iranian side of the equation. So you have world powers and involved here in what could escalate into a real conflict and a real war. So I think that it remains to be seen. I obviously hope that it doesn't happen, but the risk is there, and I don't think the risk is discounted or is being accounted for appropriately in the market. But again, numb to all of the wall of worry, right? Everyone says the market will always climb the wall of worry, and I think people just kind of place that on that wall and move on. But I do want to get to one thing, and you kind of touched on it. Actually, while we're on the market, I just want to sit there and continue along, and then I want to get to kind of our current administration and the items that are getting lost in the shuffle, which seem to be amazing. As far as I see, the market is kind of run its course to the upside for now. And I say that for a few reasons. I see longer term and even shorter term momentum and trend are kind of stuck. Until that breaks, I feel like we're kind of either in a consolidation period or we will retrace a decent amount. The risks out there, as we've talked about, inflation, recession, what real earnings actually look like. These are all very real risks, and they will start to become discounted and accounted for in the market. I saw something very interesting this week as well. U.S. equity futures positioning by investors is at an all-time high of $290 billion. So there are different ways for investors to gain long exposure or short exposure to the market, everywhere from going out and buying stocks or options to entering into futures contracts. The futures contracts at $290 billion, the most on record. It's doubled this year. Year to date, that exposure has doubled. It's significant for a couple of reasons. The first reason is, where's the incremental buyer coming from? If all of this exposure has been taken and everyone is all in, where is the incremental buyer coming from that's going to push the market higher? The second thing that's really interesting is what most people don't know is these futures contracts are so highly levered that minor to medium-sized moves in those contracts will create a real need to either sell or get out of the contracts you're in. So these contracts could be levered literally 90 to 1. That means that if you have, $1 billion invested and you get a 1% move down or a 2% move down, you may need to start peeling out of those contracts because of how levered you are, depending on how that's being managed. So a massive amount of long exposure, doubled this year, all-time highs. It kind of leads you to the point where it feels toppy. It's just bullish sentiment is way skewed to the upside. I would be pretty cautious here in the market overall. As far as gold goes, I wanted to reach back. We've talked about what I prefer and what I think investors should be in right now. Gold has been something that I've mentioned, and I still think gold is something that should be in your portfolio at all times, but especially now and at a higher allocation. But I just want to be clear about one thing as I was thinking about our conversation from last week. There are different ways to gain exposure to gold. You can buy the gold miners who have really caught up to the commodity over the past month to 6 weeks. That's been a phenomenal trade. You can buy something like the GLD, which is the State Street Gold ETF. And I want to be specific here in what you're buying. If you buy the GLD, you will gain the price appreciation in gold as the fund holds gold, physical gold. What you don't have is physical gold. You own a share in a fund that owns gold. So if your idea is you want to own gold, and I had this conversation with somebody just 2 days ago, if you want to own gold or you want to share in the appreciation of gold and the price of gold, GLD is a way to go. That's fine. You're going to get paid out accordingly based on where gold, physical gold goes. If you want physical gold as a safety net, as something you can hold in your hand, as a way to preserve wealth without being subject to electronic markets, State Street in this case, your prime broker, your brokerage account, whether it be Interactive Brokers or Goldman Sachs or E-Trade, whatever the case may be. If you want to own physical gold, you need to buy physical gold. You can't own an ETF that owns gold. You can't buy Newmont Mining. Those are different ways to gain exposure. But companies like Goldco or Allegiance Gold, where you can go out and securely buy physical gold, have it delivered to you, and hold that asset and retain that value, and then still have the appreciation in the physical asset, is something to consider. It's just a different way to gain exposure, and I wanted to clarify the differences between the two. And I hope that's helpful. I'm going to go, as we're running down on time, I'm going to go to the Biden-Harris administration and how absent they are on a number of issues. We started to talk about Israel, and even today or yesterday, Biden was asked, if he had spoken to Netanyahu, and his answer was, no, there's really nothing going on. I'm paraphrasing, but probably almost verbatim what he said. I'm not sure if you can categorize the Middle East right now as nothing going on, but I guess for Joe Biden and Harris, there's nothing going on there. So mum's the word, very quiet, except if they choose to kind of reprimand the Israelis for defending themselves. It seems like that's the only time they have anything to say. The other thing, the strike, the ILA strike, which has been a major concern here, and the ports are of major consequence to our commerce and to inflation and to the economy, economic growth across the board, jobs. I want to go to a cut by Gina Raimondo, our Secretary of Commerce under Biden-Harris, and just see how in tune they are with the U.S. citizens and the economy and our well-being. Let's just see where they're at.
Where have you been kind of focused and hearing on what would happen if the strike goes, let's say, longer than a week?
Again, I have not been very focused on that.
So I think if I could give Gina one piece of advice, and I'm going to flip to you on the three things they're completely absent on. I want to hear your opinion. I think Gina should get those really cool pearl earrings that Kamala Harris wears, where they actually are speaking to her and telling her what to say, right, wrong, or indifferent. At least you have somebody or a team of people in a van disguised as a bread delivery truck out on 54th Street telling you what you might want to say in that instance. So, Ms. Raimondo, I think those earrings are probably well within your budget. You should probably pick up a pair and come up with a better answer than I haven't really paid attention to that. We know you're not paying attention to it, but saying it outright probably, pull the curtain back across and lie to us a little bit. Just make us feel a little bit better than I'm not really paying attention to that. So we have three things here, and we're going to wrap on these and your opinion, because I want to hear absent on Israel, absent on the ILA strike and port closures, and absent on Helene, which has been absolutely catastrophic to states like Georgia, North Carolina, Florida, just heartbreaking. What's your view? I mean, you're down in D.C. What are they doing? What are our leaders looking at?
Oh, gosh. Anthony, not only are our leaders not doing anything actively to solve these problems, but you could even say passively they are acting against the American people. Let's take Helene, but that's probably the best example. Not only are they, not taking the National Guard units that have been mobilized and giving them orders so that they can go out and rescue people. Those Guard units are literally sitting on their hands doing nothing right now, waiting for orders. And not only are we not going out and rescuing people, but they just threatened to arrest a guy who's taking his private helicopter and going out and rescuing people who are stranded, people who are going to either starve to death or drown because nobody else can get to them right now. It's not an exaggeration. This man is saving lives, and he was just told that if he continues saving the lives of his fellow Americans, he's going to be arrested. They're going to take his helicopter from him. I'm sorry, but at what point does your government not actively hate you? This is insane. They're also now, our trans secretary, Pete Buttigieg, is saying that you're no longer allowed to fly drones over any of these affected areas, basically because they're trying to hide the level of the devastation. This is exactly what they did when some news outlets went to the border and had drone footage showing the absolute flood of illegal aliens coming into this country. And all of a sudden the government wags its finger and says, no, you're not allowed to do that. We're not going to let you show the American people what's really going on. I mean, this is a level of censorship. Frankly, that's what it is. This is a level of censorship that George Orwell, I don't even think thought of when he wrote 1984. So I mean that's Helene, and our thoughts and prayers go out to these poor folks. And I know there's been a lot of money raised. Hopefully that money can actually get to these people. Hopefully the government won't stop that money from going to relief efforts. But obviously we encourage anybody who can to please give, to please help out those poor folks. People have already died, and many more are at risk of dying. So again, thoughts and prayers with all the victims there. Regarding our Commerce Secretary, I'm so glad that she's our Commerce Secretary. The woman in charge of the nation's commerce has no idea about the nation's commerce. This is the same woman who it was just literally just a few weeks ago, I think, maybe a month or so ago, when she was asked about the massive downward revision in the Bureau of Labor Statistics annual benchmark to the non-farm payrolls. It went down over 800,000. In other words, over 800,000 jobs we thought we added over a 12-month period never even existed. And when initially asked about that, she said, "Oh, that's just Donald Trump lying." Yeah. And the interviewer from a liberal news outlet pointed out, "No, this is your government statistics." And she responded by saying, "Well, I'm not familiar with that." So again, our Secretary of Commerce is not familiar with the nation's commerce.
Donald Trump is already addressing this on the campaign trail. So let's take a listen to that one together.
The administration padded the numbers with an extra, listen to this one, 818,000 jobs that don't exist. So they said they existed, and they never did exist. They built them up so that they could say what a wonderful job they're doing.
So when you hear that, do you potentially think that this new numbers could be a liability for this campaign?
No, when I hear that, first of all, I don't believe it because I've never heard Donald Trump say anything truthful.
It is, though, from the Bureau of Labor.
I'm not familiar with that, but...
Our Commerce Secretary, ladies and gentlemen, wearing a T-shirt on national television.
It's insane. It's insane.
So, and then we got the longshoremen strike, which again, this is such a threat to national commerce. You're talking about a huge portion of not only necessities like food, but also necessities like pharmaceuticals that go in and out of these ports. This would have completely hamstrung international trade to this country. And, the president had a lot of options where he could have, through legal means, forced the unions as soon as they declared a strike to say, no, you're immediately going back to the bargaining table and you guys are going to work this thing out. And instead, he sat on his hands. In fact, he sided with the strikers effectively. And fortunately, there is at least a tentative deal, and we're going to basically push off the strike until mid-January. And hopefully it's resolved by then. But, again, at the end of the day, the president and the vice president had options at their fingertips to benefit the American people. And once again, to your point, Anthony, chose not to use them.
Yeah, I think that's a great summary. I think, a lot of what's gone on, and we'll wrap there because it's been a great show, is not it's not censorship. It's not ignorance. It's not, I'm doing the best I can. It's treason. When you look at our own government, not only allowing people to die, but forcing others not to help them and have them die and have their homes destroyed, that's treason. When you look at the southern border and you refuse to let people even see what's going on there or pad the numbers, allowing tens of millions of illegals to come into this country and effectively destroy the country from within, that's treason. And then you look at something in particular, you look at like a Corey Mills, who's gone out, Congressman Corey Mills has gone out on his own dime, strapped up, and gone out to North Carolina to help save people, deliver goods, and do the best he can with his own bare hands. That's what America's about. It's not Raimondo, and it's not Biden, and it's not Harris, and anyone that thinks it is, and they think that's the world they want to live in, they're sorely mistaken. They've really been brainwashed to the point of being numb. And at the moment, it's too late. When they wake up, they're going to really regret not understanding and not seeing what's going on here. The one thing I would say is, as far as donating to North Carolina, my wife and I did donate to Samaritan's Purse. It is one of the, if not the best way to send money, send funds so that the necessities, food, water, and assistance can get to the people that are suffering. So hearts and prayers, as you said, go out to these people. I don't want any administration to be this inept because I love this country dearly. But this administration just needs to go. They are absent or inept or just treasonous on every issue. It's just amazing. With that said, EJ, I hope the next time you spend a week in New York, you can make some time for me for dinner.
Oh, here we go.
Because I love the conversation and I would just love to break bread and have a drink. I know you're an old-fashioned guy, so am I. I would love to do that next time you're around, and I forgive you for blowing me off for the week. It's okay, my friend.
I'm going to go jump out a window now. I promise. We're going to schedule a nice dinner. My treat. Okay. This one's on me.
Okay. All right. Sounds good. Have a great one, my friend. I'll talk to you soon.
Till next time, Anthony.
Bye.